Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Thursday. Welcome to PreMarket Prep. I'm Spencer. There's Joel. There's Dennis. And in Dennis's words, it's deja vu all over again. Pretty sure it was Dennis Dick who said that first. We'll talk about deja vu markets. We'll talk about the last day of the quarter. We'll talk about Bed Bath and Beyond. Actually, retail as a whole. Ryan Craver did warn us about this the other day. And if you own retail stocks, then today's not going to be a good day for you, I'm afraid. Between Bed Bath & Beyond, between Kohl's, Foot Locker, there is some pain in retail stocks today. We'll talk about all of that. Marc Chaikin is our guest today at 8:35. Before I throw it to Joel, some calls to action. Number one, hit that like button, please. Number two, stay tuned after this show for day 2 of our small cap healthcare conference. You can win a free 1-year subscription of Benzinga Pro. Go to bzsmallcap.com to see how you can do that through the conference today. Let's bring on Joel's charts here. And Joel, how are we doing on this Thursday morning?
Oh, well, there's a couple ways you could look at it. The bottom line is we're up 15 handles at 64.75. We caught a bid at 4 o'clock and 30 seconds, and that bid took us all the way up to 43.89. We sold off 23 handles, and now we're back in the 43.60 handle where we chopped and slopped all over the place yesterday. So end of the quarter, we'll see how we end this one. Crude taking a little breather from that big move, down 75 cents. Gold up 370, hanging out near that 1720 level, big level there for support. Silver up a dime, 21.58 and a half. Bitcoin up a couple grand at 43.160. Ethereum is up $156.25. So we're going to bring in Triple D here yesterday. And Triple D, I think you got to just go to bed and just stack those spider offers up there and just let them come and get you.
It's literally the same market every single day. And if you guys haven't recognized the pattern, then you haven't been listening to this show, because we've been talking about this pattern for the last 2 weeks. And the market rallies all night and then starts selling off during the pre-market, and then seems to sell off the majority of the day, and then starts rallying right from the 4 o'clock close. Rinse and repeat. It's been the same thing again and again and again. I don't know who's jacking it overnight, but I tell you, it seems like all the moves here are overnight. And if you're buying, at the open and selling at the close, you're absolutely doing it backwards. The play has been to buy at the close and sell during the pre-market, really, because it seems like by the time we get to the open, we've already leaked substantially. And that is the same story again today. We're up 40 handles overnight. I don't know who's buying us up 40 handles overnight, but they are way wrong, because now we're up 15. So we're getting back to almost 2/3 of the gains already. Joel, this is just it's a weird market to a certain extent.
I was just thinking that same thing. But here, and the reason that I'm a little bit concerned is that in this great bull run that we've had, we did have the overnight pops. And the overnight pops, we'd either hold them, maybe give back a little bit, or blast through that pre-market high and just keep going, right? And, maybe settle back during the day. But now it's the exact opposite phenomenon, where we're getting these jacks overnight, they're not holding, and then they're not going back to that pre-market level. So we're at the end of the quarter. I'm going to reserve old judgments until the end of the day, because we could be up 50 handles, we could be down 50 handles. I don't think
the quarter
so.
Throws a monkey wrench into that overall plan, because we know typically you see this day actually close strong. So what we are calling, and what has been the pattern, is this day closes weak. But because of the end of the quarter, I'd be hesitant to just employ this strategy today, for the simple reason is that historically, from a quantitative perspective, and I'm a quant, historically, this day closes strong. So that's why I probably won't be employing the strategy we were just talking about today. We'll see if this resumes on Monday.
Right.
I'm
And
trying
then
to put on
also,
your show and I got advertisements coming at me. Okay.
I'm sorry.
No, that was in the background. I don't know if you guys heard that.
No, we
but
didn't.
I was like, I was trying to put on the show for the chat, and you got the pop-up ads, and then it's like blaring, the noise at me. So sorry about that.
Okay. Also, another thing just to keep an eye on. You guys, know a little, how a little too technical at times, but last week when we hit this 40, we traded at a 4,300 handle. We shot out of here like a cannon, right? And boom, got up to 4,450. We have worked our way into this handle. We didn't get near yesterday's low, but as of right now, we haven't shut out of a cannon again. So we'll see how we end up today. It's hard to. It's not an inside day already because of the Globex high. But man, I wouldn't be all that surprised if we even trade within yesterday's intraday range and not looking for any downside, major downside until we crack the low from yesterday, which is right near Tuesday's close. But we got retail dragging down the market today, huh, Spencer?
But yeah, I just want to follow up on one thing Dennis said
Sure.
quickly, and that was just the being the last day of the quarter. I don't know, and I know we've discussed this many times, but do you do anything different today that you would normally do, or do you prepare for anything different, or is it just extra volatility at the close potentially? That can go to either of you. I think Dennis just threw himself on mute. So Joel, I'll go to you.
No. I mean, I'm pretty much the same way as far as portfolio adjustments. I mean, I'm getting a little nervous up here, but
You're always nervous up here.
yeah, no. We'll see. I mean, based on the last 3 months' performance, unless we have a huge rally today, we are going to be starting Q4 out with a sell signal, and I haven't, that since. I don't even know. I don't even know if Q1 we still had the market going up, right? In 20. So
Yeah.
Q2 is probably when it turned. But by the time it was into Q2, we were from a quarterly basis, June, we were right back up. So it's the first time in a long time. We'll see if it holds. I just kind of just got this feeling for the remainder of the year. And it's just going to be, we're not going to crash necessarily, but I just think the upside is just going to be much more, much thicker with offers and sellers. So we completely lost Triple D here, huh?
Oh, we did. He may have had like a kid emergency. He just stepped.
I hope not.
Yeah. Well,
I hope not.
he stepped away from his desk. So
Okay.
yeah. All right. Let's go to the number one mover of the day, and then we'll bring Marc Chaikin on in a few minutes here. But Bed Bath and Beyond. Oh my goodness. Earnings this morning, and they were pretty bad. So the earnings per share for the second quarter, they reported 4 cents per share, down from 50 cents per share a year ago. Sales missed just under $2 billion versus a $2.06 billion estimate. But the guidance is what's more concerning here. They gave Q3 sales guidance in the high $1 billion range versus an estimate of over $2 billion. Earnings per share of 0 cents to 5 cents. That's the range they gave for EPS for the current quarter. 0 cents to 5 cents versus a 28-cent estimate. Big miss on BBBY. Let's get the charts up. There they are. Whoa, look at the top left.
Top left, and I don't know if Mitch is in the background, but I hope he was crushing bids when we started talking about this thing. That was right at 1875, 1880, and I guess you just gotta, instead of wait to buy the dip in this one, you should have just been whacking bids. I just look at the monthlies here, and took Spencer and Mitch about a half hour to figure it out.
It did not take a half hour.
All right, 25 minutes. You are coming into support. I mean, on days like this when things are getting crushed, it's hard to say. But what do you have? You have the low for the year at 1770, right? That was your January low. But it's augmented by 3 other lows under 18 bucks. 1761, 1799 for 1795. So hands down, first time off that level, you may get a bounce to see if you're thinking up around 18, but boy, oh boy, that's a big level. Then you have a gap down. A gap down on a monthly. That's weird. Was that I wonder what happened that month. Oh, they must have had earnings. Oh, they probably had earnings at the end of the month. So then you got a gap down to 1538. So if you don't like it at 1770 and you see 1538 today, uh that'd be quite the beatdown. But big stores, big coupons. I mean, what else can you say? They did go from 20% off, I think, to 15% off. I think they're going to have to go to now 10% off in their coupons. Huge stores. I mean, this is just a bad day for retail.
Yeah, bad day for retail. Sorry, I was listening in the background. I just got, I'm going to be off and on today. I have so many positions on, and I'm just trying to work out of some stuff here. So, but I did listen to what you were talking about. I mean, Bed Bath & Beyond, this is a disaster. This was a meme stock back in June. Remember the big move from 27? Oh, we're going to get the shorts and we're going to squeeze the shorts. High short interest stocks all flying. Twice this went up. January and June. You have to use these opportunities. I'm going to say it again, and we're going to take it to a meme stock conversation, but you got to use the opportunities when these meme stocks squeeze and you're just happen to be long them. These are fantastic selling opportunities. They're not fantastic buying opportunities. They're fantastic selling opportunities. And here is a business that has been struggling for a long, long time. It went from 25 to 50 in about a week because it was a Reddit stock. Those are selling opportunities, not buying opportunities. So, I mean, here now, anybody who's stuck, that bought it back, when it was a meme stock and was going to go to 100 or 200 and they were going to squeeze all the shorts, is getting punished. Rightfully so, because fundamentals do eventually matter, and fundamentals matter today on BBBY.
I want to read you from the press release. It's if you can imagine like a spin wheel of pick a reason why we had a tough quarter. They're going for all of them today. Greatest hits. Here we go. This is from Marc, the CEO of Bed Bath & Beyond. Following a solid growth in June, we saw unexpected external disruptive forces towards the end of the quarter. In August, the final and largest month of our second fiscal period, traffic slowed significantly, and therefore sales did not materialize. As COVID-19 fears reemerged amid the ongoing Delta variant, we experienced a challenging environment. This was particularly evident in large key states such as Florida, Texas, and California, which represent a substantial portion of our sales. Furthermore, unprecedented supply chain challenges have been impacting the industry pervasively, and we saw steeper cost inflation escalating by month, especially later in the quarter, beyond the significant increases we had already anticipated. So, COVID, check. In supply chains, check. Inflation, check. Everything.
I did one quick good story. My brother-in-law was stuck in this stock big time. I think maybe 30, 35. And I think he averaged down on it. But I remember talking to him in January. And this guy, I think he ended up getting out at like 45. And he just thought, man, what a gift.
In the Reddit gifts. The Reddit gifts.
He was like, what a gift. And, he's a retail investor, long term, got caught, averaged down, which he shouldn't have done. And then he was just like, thank you. Thank you.
Back in January, there was so many gifts, and we knew when we looked at our portfolios, long-term portfolios, and everybody thought they were a genius. And I'm like, I don't even actively manage my long-term portfolio. I buy and hold. And like I said, I think I was up in 96 out of 100 stocks that I have in my long-term portfolio. And I was like, that's just not normal. It's not normal. So, I mean, everything was just going up. But then you had all these gifts on the side, like the Bed Bath & Beyond, the Reddit gifts, where, and AMC and GME to a certain extent obviously were gifts as well. And you obviously participated fantastically in the GME gift, Joel, selling, out, perfectly on that one. But I mean, that's what this is. When stocks disconnect from fundamentals and they're trading 4 or 5, 6 times where they should probably be trading, what do? You sell them. That's what you do. And you take the money and you run and you say, thank you, stupid market, for giving me a gift.
We are BBBY just hit that level. I don't think I've ever done this before on the show, and I'm going to do it, and I'm going to stick my neck out, and I'm probably going to be wrong. But I think the next 15-minute candle is going to be a green candle.
I've never heard Joel call out a 15-minute candle before prediction.
I'm probably wrong.
All right.
Full disclosure, no position. I'm just saying, man, if I was short this thing, or I had the 22 puts or 21 puts or 21 and a half or 19 and a half, I would be buying some. But hey, Been wrong before. I'll be
No,
wrong
wait,
again.
no, 17. Oh, wait, 1760. What was it that you said?
I said 1770 is where I
Okay.
thought that.
Okay.
That's a bunch of monthly lows. If people aren't stepping up there, then whatever. They
All
know
right.
more than me.
All right.
All
Let's
right, where's Mark? I gotta talk to Marc Chaikin.
He's here. Let's bring him on. Marc Chaikin. Good morning.
Good morning.
Mark, Q4. Come on, tell me about it. We're ripping back the new all-time highs. We're going to 5,000 in Q4.
Well, 4,700 on the
Okay.
S&P.
That's what I want to hear.
Yeah, let's just put a point on Bed Bath & Beyond. The power gauge rating turned bearish on July 22nd. The stock was 29.63, and it stayed bearish ever since. And in 18 of the last 20 quarters, whether they reported better than expected or worse than expected earnings, the stock has always sold off the next day. It's an amazing pattern.
There you go. That's all that matters. It's not even what the numbers. It's the stock.
How they react. But let's go back to the market. Since we talked on Yom Kippur, we finally got a 5% sell-off. We got the 5 and 10-day advanced declines at oversold levels, which hadn't happened. We got heavy volume in the SPY on the downside, and yet we're still holding that 100-day average in the low 4,300s. So till proven otherwise, we get through all this noise in Washington, which is really,
can you follow it really, Mark? Can you really? I mean, can any attempt to follow? I mean, dead on, dead off, stimulus on, stimulus off. I mean, so confusing.
They always resolve this stuff. I mean, this is silly. We shouldn't have a debt ceiling limit, and we play this dance every year. It's the same tango between the guys who don't want to increase the debt ceiling, who contributed to it with all the spending. But these things always get resolved. And the U.S. can't default on their debt. I'm sure you guys have talked about it. We issue the debt. Everything's denominated in dollars. You can't default. You just print more money. So this is sort of a silly.
Forever.
Yeah.
And then, until the markets don't like it anymore. But the bottom line is, I think there are opportunities here. And one thing I'm looking at are semiconductors. They're breaking our long-term trend lines. So now the ratings on many of these are neutral plus, which means underlying fundamentals are bullish. And just as Joel doesn't like or never calls 15-minute candles, I'm going to say that you got to step in and buy some of these semiconductor stocks on this weakness. And two that I like, mid-cap Cadence Design. It's been a great stock.
What's the symbol on that one?
Yeah, what is that?
CDNS. They provide software and equipment for semiconductor manufacturers, and a smaller cap semiconductor, Kulik and Safa, KLIC.
All right. So we got CDNS and we got KLIC. All right.
So I think these are two that you want to step in and buy on this weakness. I mean, I know logic never works in the stock market, but you've got the whole automobile industry that's just starving for semiconductors. And I think, you're going to get another wave in the semiconductor stocks. They've sort of been straight down here for a while.
You meant KLAC, right? You didn't
KLIC. No, KLAC is CLAC, KLAC 10 core. No, this is a small cap, Kulik and Safa.
I've never traded KLIC, I don't think.
Yeah, it's based in Philadelphia. I think I've known it for 40 years.
Wow.
I always
giving us new stocks. We like this.
Yeah, well, I like new. And
I always think it's a furniture company.
Sofa. That's because you're mispronouncing it. Kulik and Sofa. I also think that vaccines are going to be with us. The COVID vaccine is going to be with us.
You still laugh.
Ad infinitum. So I think you got to look at some of these plays in the medical field, and the obvious one to me is Moderna. Yes, they only have one product, but they've got 24 new vaccines in the pipeline. And there was talk a couple of weeks ago about a combination flu shot and COVID booster or COVID shot. So with only 27% of the world vaccinated, and likelihood that we're going to need boosters, for years to come, just like we do with a flu shot, I think you got to take a look at some of these medical stocks that have come down here.
Sneaky double bottom from the last 2 days in Moderna. So mRNA, so it gives you a level to lean on. I always like when I get 2 consecutive lows in the same area. So because it gives you like that, area. Now you're 5 points up from there. So I like that, that spot there as trying it. Obviously, some of these drug stocks have really been hit. I came on the show a couple days ago, Marc, saying the same thing. I think some of the drug stocks have just been punished severely. I mean, Pfizer, if we look at that, it's come from $52 when everybody had to own it back to 42. I mean, we've had a nice pullback at some of the drug stocks, and I think it is a buying opportunity.
Yep, I do. And I just think that once we get through this early October period where we got all this fuzziness in Washington, that earnings season is actually going to be pretty good. The one thing you have to watch out for is obviously the supply chain inflation conversation in the guidance that's coming up. But remember, when you're looking at the market here, Joel, you've got the blackout period for corporate buybacks in place right now, which means that that underlying bid for the market is not there as we head into earnings season in this 2 to 3 week period. So that gives you the this sort of volatility that we're seeing on a daily basis because you don't have that bid in there. But I still believe with all this liquidity in the system that we're going to work our way higher.
Marc, I got a question for you, and I got lucky. I won a lunch bet with Dennis on Microsoft.
All right, we're skilled on that one.
The buyback. Whew. I mean, I know I'm stepping out on a huge limb here, but is it premature to call this their IBM moment? I mean, IBM bought billions of dollars worth of stock near the high. I mean, I know they do it. They're not out there buying it that day at 305, but man, oh man, just what a run in Microsoft. Unusual year for it. Unusual off the March low. Besides the buyback here, let's just talk about these big cap tech stocks. They've kept the market up forever. Is this the place to be in Q4, or the IWM going to lead us in to 47M?
IWM, that was my other theme because interest rates are clearly going up, and small caps do better in a period of rising interest rates.
Okay.
So the mega cap growth stocks are going to be under pressure from a valuation, a PE point of view, because if we do get the 10-year above the old highs at 173 on a yield basis, then these auto strategies are just going to kick in as they did earlier in the week and put pressure on mega cap tech. And that's why I mentioned Kulik and Safa in the semiconductor space, because I think small caps are going to do well. Now, having said that, our power gauge rating on the IWM remains bearish, but we're in the middle of that trading range, which now is almost 8 months long, going back to February.
Long time.
And I think the likelihood is that we break out to the upside at some point in the fourth quarter.
Wait, interest rates clearly going up. You mean like getting up off the floor, but not much more than that, right?
Well, no, the 10-year's working up toward the high end of the range. 10-year peaked in April, I think.
Yeah.
At 173, 175, and with the supply chain issues, wage inflation, and commodity inflation, I think that interest rates. They heard Powell. The fact that on the day of his Fed minutes and his comments, the market went up, not down, and interest rates didn't budge until Thursday, Friday.
Yeah.
Doesn't mean people weren't listening. And clearly they're going to stop. They're going to start tapering, whether it's December or January. And that's not an interest rate hike, but yes, it is. And I've been out there saying that sort of tightening is not the same as raising interest rates, but taking the stimulus, taking your foot off the pedal, ultimately leads, especially in an inflationary environment, which I don't believe in transitory. As
You
Dennis has been talking.
You don't believe in
Wait,
transitory?
wait. It's funny you mentioned that, Mark, because I'm not sure Jerome Powell believes in it either at this point. Because I don't know if you saw what he said yesterday, but he was acknowledging that it's persistent. It's a persistent little bugger. Because that's not
And
durable.
the Dollar Tree's jacking up their prices.
Right.
I mean, do you think they're bringing them back down?
No, it's the $1.10 tree now.
Yeah,
So,
the dollar and
You
a
have to
quarter.
change all the
probably.
signs.
yeah, and
$2,
Dennis's
20
beer
below.
Dennis's beer can analogy. And if you talk to builders, our contractor was around the other day, and he said one client's complaining because the cost of the house is so high, and he's saying, well, look, lumber futures went all the way down. I mean, this is the client from hell, right? He watches the lumber futures market, and our contractor told him, yeah, that's raw lumber. You're talking about finished lumber and treated lumber, and he said that's not going down. In fact, it's still in short supply. So you've got to look at what cues you're looking at. Yeah, the lumber futures went down, but the cost of lumber to build a house is still way up there.
It's not even just the lumber; it's every single aspect that goes into the house. Like I just keep getting hit. Like my electrician was a coil of wire. The wire that they're running or whatever was $40 last year. It's $120 now. The same exact coil has tripled in price.
Well,
so it is just not lumber.
Tripled?
There's so many things tripled in price. From
there's a stock to play that, Dennis. It's called ATKR. It's another small cap stock.
What's
ATKR.
Say it again. Sorry.
ATKR.
ATKR.
It's a great stock. I've recommended it. It's been my bullish stock of the week.
ATKR.
And it's an interesting play because not only do they provide, it just peaked above 100. Not only do they provide, at the industrial level, but for single family homes, the kinds of wires you need to put in a charging station. And
that seems important.
California sort of mandated that new homes have charging stations. That may become a trend. And ATKR is a way to play that trend.
All right, Mark is coming hot with today with some names. He's dropped some.
Is it too late now? You think, Mark, or there's still more? Because I'm looking at this one. A year ago it was 20. Now it's 90. I feel like I'm chasing it a bit.
I know, but the earnings are good, and the stock periodically pulls back like most small caps do. So you're in that little mini pullback phase here, right into a sort of support area. So, yeah, I mean, hey, look. I was looking at large cap stocks, and everything I like was selling at 40 and 50 times earnings. So you got to adapt to the environment you're in. And yeah, 20 to 100 looks expensive, but if you're looking out a couple of years and looking for where the growth is, it's in these lesser known names like an ATKR, like a KLIC, and I think you have an edge in the small cap space that you don't necessarily have in the large cap space.
Nice. All right, Marc Chaikin coming in hot today with some symbols that we don't talk about very often, or ever, actually, for that matter, ever. But we love it. We love it. Marc Chaikin, long-time market veteran, founder of Chaikin Analytics, creator of the Chaikin Money Flow Indicator, joins us every other week on the show. Thanks a lot, Marc.
Thank you, guys. Always a pleasure.
Always a pleasure to talk with Marc. Hey, smash that like button for Marc. Let's get those likes up. Come on, those 3 concrete ideas.
Yeah, he gives good. Marc always comes. Marc knows a lot of different trading ideas, and obviously, I wish we'd have known the wire thing. Cause I've known about this for probably a few months here already on this ATKR. So I could have been buying this one back at 65 or 70 if that was a way to play it. But I mean, there are so many issues, and that's why people who say, oh yeah, well the housing prices keep going up, they can't keep going up at 20%. But let's look at what the build costs have gone to. I mean, how current housing prices are simply a reflection of what it costs to build a new home. So you get a discount. It's like a used home. So, if you can build a home for $500,000, a used home might be $300,000, $400,000. But when these same homes are costing you $800,000 or $900,000 to build now, well, somebody's going to say, well, if it's going to cost me $900,000, I can buy this home down the street for $300,000. I'll do that. And that's what brings the housing prices up, $400,000, $500,000, $600,000. So if you think we're going back to where we were in the housing market, the housing market's going to crash and we're going to go back and the housing price is going to fall 50%. In order for that to happen, the building costs need to fall 40 or 50%. I don't think these builders are bringing down their costs anytime soon because half of it's labor almost. and the labor costs
The
are
labor
coming
are
down.
coming down.
They
If
never
the
bring the
labor,
labor
if you
back
could
down.
find
How many
the
people take a
labor,
pay cut?
yeah. Oh, if you could find the labor, I mean,
You can't.
I count my lucky stars because we were considering for years to do a build, and just the more things went, we're like, no, no, we can't, no, this is hard, man. You feel it like knobs and this and that and everything, and would be absolutely be getting crushed right now.
I'm getting
Absolutely,
crushed. I'm
yeah,
living that life, Joel. I'm getting
yeah.
crushed. Every single thing that comes in is coming way above
And
the budget.
and that happens anyways. That happens
And it's
anyway.
way worse right now. I'll
Yeah,
tell you, like in the COVID environment, it's like that on steroids. So, I mean, it's horrible to build a house right now. Obviously, I even like we're supposed to have a shop and I put that whole thing on hold. I'm like, the prices are just too nuts right now. I'm like, I'm holding off on that part of it. I can't hold off on the house because we're into it. But I mean, I can totally hold off on the new shop. So, I mean, at the end of the day, you hope, everything continues to increase over time. But, we went in this huge bubble. I'm building right at the top of the bubble. I feel like, the building costs could come down. And some of them probably have. Like lumber prices have come down to a certain extent. I know,
Yep.
Marc was saying, that we know the futures come down, but the cost of the 2x4s have come down too. I mean, in Home Depot, and I'm in Canada, obviously, they were, it was $10.99 for a 2x4. Going back 6 months ago, those same 2x4s are going for like $4.99 now. So some stuff has come down, but a lot of stuff has not, and the labor has definitely not. The trades have not, and you can't find stuff. But it's not a home building show. But home building is obviously a portion of the market. It's a big portion of it,
It is.
and
It's a big
and it's
portion.
a huge part of this inflation story as well.
And also the other thing, I mean, and who knows how far it will be concerned down the road, but people are borrowing to buy and build these houses at these inflated values. I mean, I know we're not looking at a
Yeah,
at a
at
2008 financial.
2% interest rates.
Yeah,
So they're thinking, oh yeah, I can do this at 2% interest rates, and it's the
no,
driver. You build the bigger home when you can borrow more, Joel. So you can blame that for a lot of it too. I mean, it all goes back to the Fed and easy money. So the inflation, they wanted inflation for how long, Spencer? For how long has Powell been saying we need to get some more inflation? Even though they had it in pockets, they wanted inflation. They needed inflation. Well, they got it. You got it.
Well, are you referring to the 2% or
It was a whole mandate, that inflation
yeah.
wasn't
For
enough, and we
years.
need to increase inflation. This was what Powell was spewing at us a year ago, that we're trying to get inflation up to 2%. Well, they've clearly overshot that goal massively, and and obviously now it's like, how do you put it back? How do you cool it? But the only way to cool it's to raise interest rates. You can't do it. So I don't know how you fix it.
Yeah,
It's a massive problem. But again, it's a massive problem for cash too. That's why I keep thinking, like, I don't see this market crashing, even though you can say, that this we're overinflated and a lot of stocks, have had incredible runs. I just don't know where you go. I mean, because you're losing in cash. So it's a very tricky environment, because we have not seen inflation like this in these numbers. And I know, when they're saying 5%, we know it's a hell of a lot higher than that, but we haven't seen this in North America in a very long time. Probably going back to what? That like the early 90s?
Oh, I thought you were going to say the 70s. I was like, don't say it.
No, but the early 90s, we had pockets of inflation hitting too. But it's been 20, 25 years since we've had inflation like we're seeing today.
Yeah, I mean, yeah. And and how do you outpace it? You buy stocks, because that's
or commodities,
or Bitcoin.
Yeah, you've got to buy physical assets.
Right.
So I just don't know. I don't think so. The way I look at it here, and people say, "Oh, you learn what's the market? I want to raise cash," but and I have some cash, but at the same time, I'm like, the cash has been really bad. So I don't know where you go. Where is safe right now, Joel? Like, you tell me. Like, people normally would go into gold, and you'd say, okay, yeah, well, if you're going in an inflationary environment, you absolutely want to own gold. But gold and silver has been an epic disaster.
I know.
It's not responding to inflation at all. It should be going up. Like, gold and silver historically should be flying in this inflationary environment. And we're seeing the opposite. We're seeing it sell off. So then you say, okay, well, you go to digital gold and crypto, and maybe that's where the people are going now. But it's tricky. It's tricky to put on your long-term investment cap and see how this all ends.
Yeah, you know what's crazy is on days when the stock market goes down, Bitcoin is down too. So I don't know what kind
It's
of a hedge.
totally possible.
Well, I don't know what kind of a hedge that is, but it's supposed to be a hedge.
And gold too. Like gold used to always go opposite the market. You know, Kramer says you got to have some gold in your portfolio for the long time for the insurance aspect of it. But let's be honest here. I mean, gold has not been a good hedge for a long time. I don't know. Do you want to own gold, Joel?
I
If
own
you're in
some
an
and I hate
inflationary
it.
environment, you should. But I don't know. Are we in a different environment now where gold's not going to respond well to it?
Let me put it
I
this way.
hate that as much as my Peloton.
I don't know why anybody my age would own bond treasuries or gold ever. Like, or maybe not ever. Maybe for the next 30 years. I don't know. But
I
like,
talked to my neighbor and he's loaded right up in gold. And he's, and obviously not a trader, but just saying, I see all this money being printed and I want to be, hedged. I see inflation happening and I think gold's a place to be. I mean, and if you read an economics textbook, it will tell you to exactly do that. I'm questioning if it works or not. Like maybe we're going to regret, maybe we're going to come back to this episode a year from now and to see gold, the GLD at 250 and be like, wow, that was so obvious. It's an obvious trade, but it's not working and it hasn't been working. Like, I mean, when your trade's not working and people have been flying, Peter Schiff has been preaching to fly into gold for these exact reasons for a long time and it hasn't worked. So I don't know. It's tough. It's tough. If gold won't go up in this environment, what environment's going to go up in?
I don't know. And the sister to the inflation thing is supply chain concerns, and that is exactly what is hitting Kohl's this morning, because Bank of America came out and said inflation, supply chain problems. We're going to downgrade Kohl's today, and KSS is getting hit on that. Foot Locker was also in that note. They're getting hit on that. There's a bunch of stocks mentioned in this note, but Kohl's and Foot Locker were the main two. And for Kohl's, it was a wait. Let me just pull it up here because I added it over here. Kohl's was a downgrade to underperform, gave it a $48 price target. Foot Locker, it was a reinstatement to underperform, price target 45, which is not that dramatic, but for Kohl's, $48 price target. We were at 54 yesterday. We're at 49 now, 49 now. So
Kohl's had no business being up at 60 though either. I mean, it probably had no business being down at 10 back, when we thought everything was going under. Obviously it was $40, but it had been in, cyclical decline for a long time. Like you've seen the brick and mortar not doing very well. So even before COVID hit, Kohl's was like 45, $50. Then COVID hit and it really got ugly. But did it have any right? Like, is Kohl's in a better environment now than it was before COVID hit? I challenge that. So to say, maybe it should be where it was, and maybe 49 is a happy place for it, but 60 just felt like an overshoot. So I don't know. I'm not coming to and buying brick and mortar stocks on a dip. I'd be buying tech stocks on a dip, maybe some of the stocks that Marc Chaikin just mentioned that are still in a good environment. Buying brick and mortar on a dip, what works, it seems like, on dips are stocks that are in uptrends. You buying those on dips. Kohl's not really in an uptrend anymore, and I challenge whether it should have ever been in a hardcore uptrend, other than the fact that it really overshot during COVID.
They're hitting it. I'll give you a couple monthly lows to keep an eye on. 48.65 was your August low, and then it drops to 46.46. Or 46.56 was your July low in Kohl's. I don't understand. These stores are so huge.
yeah,
I got so much stuff in there. I'm like, who? And then you see like 40 of like these same, like you walk by the men's department. I went to Target to get something, and I'm like, who's going to buy one of those, let alone 40 of those? I don't know. I don't understand.
Well, Mitch and I were talking about this like an hour ago, and he did bring up a good point. The one thing Kohl's has going for it is the Amazon return program, which at the very least will get you into the store, right? Whatever you buy on Amazon, you can go return at Kohl's.
Why not just buy Amazon then? If you're buying Kohl's because of Amazon, why not just buy Amazon?
No, that wasn't the point. The point was
they got people going in the stores.
They're going in the stores because they're returning the stuff from Amazon. So Amazon is the driver. Why not own the driver? Is what I get your point. I'm just saying, like, the whole reason, this is going to be huge for us. We're going to get Amazon returning products to our store that they bought online. Like, I mean, if you have to derive your demand from another company's return policy, that is not a company that I want.
I am not arguing against you. I'm just saying you talk about getting foot traffic, people in the stores. This is a driver. That's all I'm saying. And actually, no,
Amazon
not
is the
me. That's what
driver.
Mitch is saying. I didn't say it. Mitch said that. I agree with you, Dennis. But it's something.
I'm wound up today, as I can tell.
Something that Mitch. Did I
defend him, Mitch? To defend him.
No. Did I relay that correctly?
You did, Spencer. And to make it even better, they give you free dollars for their store. They give you $5. Like, go spend it. $3.
So if
There you
you
go.
return the stuff from Amazon, they give you Kohl's dollars.
Whoa, wait a minute. It used to be like 10. There is some major inflation going on.
That's deflation.
That's
They're only giving you
deflation.
5 now.
No, because it's
Because they're couponing, not
well,
as much.
they're couponing less. That would be inflation, wouldn't it?
Yeah.
Whatever. Okay,
Sneaky.
moving on. Did you guys see space today? Bill Big D was giving me a hard time in the chat this morning. He's like, I bet you Spencer's going to mention space. Well, I am, because it popped after hours. Because remember that FAA inquiry where everything was on pause while the FAA looked into their flight deviation, the flight path deviation from back in July. Well, that inquiry is over. FAA says thumbs up, you're good to go, space. So Virgin Galactic popped on that, got to above $25 last night.
Every space flight pop is a selling opportunity.
Look
So
at
same
all these
story.
notes.
Stock making new lows on the move yesterday. We get a pop because the inquiry's gone. This isn't changing the fact
People are
that
not going
one,
to space.
I didn't know it was a 30-second experience in space. And, I think that turned off a lot of. I always said I'd love to do that, and then you find out you're only going up there for 30 seconds or a minute of feeling actual, space part of it. It's like, well, it's $350,000 for a minute. That's kind of expensive. So I've not liked it since actually the successful launch, because then I learned more about it and I was like, this just doesn't seem worth $350,000 whatsoever. So they have a few people signed up. They'll eventually get some revenue from it. I don't think this is a huge growth industry. I don't think it's worth the market cap it currently is. I like the story back last year. Now the story is completely broken. The stock went from hot to ice cold. I'd sell all rallies in this, including this one.
Got
Just my
real
opinion.
overdone. It got real overdone on that pop in the after hours. Once again, your 4 a.m. or this was after hours. So, same thing, trading got up to 25.24. You're a buck off that. That was a good area if you were looking at your dailies, because you had, no, not really. Couple highs in that area, but use that as a target now. Let's see, was there anything? No, the highs were in the higher 25s. But right now we're under your 2-day high of 24.94. So keep an eye on that. I mean, if you're looking for any major upside, got to get through the 2-day high, 24.94.
All right, we're going to do ticker time in a second here, but I just want to talk about a couple EV stocks for a moment, and one of them is Lordstown Motors ride. We are going to talk about this tomorrow as well, because everybody, Marcus Headquarter is coming back on the show
Nice.
tomorrow, and then I think every Friday for the rest of the month. I'll clarify that, but definitely tomorrow. I'll tell you that for a fact. So we will talk this tomorrow, but there is news on ride today, and it is not good.
Apparently it's good. The stock's up.
No, I'm saying it's not good. The company that named itself after a town and they made a whole, but it was all this fanfare where we're buying this GM plant that's in Lordstown, Ohio. We're going to turn it around. We're going to bring in the jobs to middle America. And fast forward 2 years later, and we are selling that plant because we need the money. And that's what's happening today. They're selling their namesake plant to Foxconn. I didn't see a price tag on it. I don't think it really matters though. So their one and only production facility is not going to be there anymore. So I'm not quite sure what that means for an EV company. But anyway, Lordstown selling their plant. Good news, they get some cash. Bad news.
Yeah, they need to. Obviously, this is a survival move,
Yes.
right? I mean,
Yes. Yes. And in related news, I don't want to call him our friend, but someone who's been on the show before, Steve Schrader, the CFO of Workhorse. Workhorse, I'll remind you,
Where's that stock?
Workhorse has the technology that Lordstown Motors uses. The CFO of Workhorse has left the company, Steve Schrader. So not good in the Lordstown Workhorse land today?
Well, I don't know. I would say it's very good in the Lordstown because it's up 50 cents. So why it's trading up on bad news is, that's often a good sign when stock's trading up on bad news. I don't know. Eight's major resistance on ride though.
They like it because they're getting cash. They're getting cash in their pocket, but how are they going to make any cars without a production facility?
They must have one.
Well, maybe
somewhere or
they'll rent it.
something.
I mean, is Foxconn gonna immediately turn it over? Turn it into something else, or do they get? Is it a buyback? Maybe are they gonna rent it and they sign a lease on it or something? It's the only thing I could see in it.
I don't know. I don't know. I mean, I don't know.
I don't know. I
But-
don't know either.
The EV story was trying to get hot before the market rolled over a couple days ago. I will say that some of these EV stocks, just like the Lucid Motors, was trying to get hot before the market rolled over, 3 days ago, or when we had the really bad, 2 days ago, I guess. So even Fisker had rallied up significantly, and then you get the pullback here.
Ooh,
So it's hard to be long ride when you're talking about them selling their production facilities, but I will say, and I'm not long ride, not going in, but I will say the technicals, these stocks have stopped going down a lot of these EV plays. So technically, they're actually showing a little more relative strength than they were a month ago, a lot more relative strength.
8's interesting. You mentioned that in ride. It popped there 2 days ago. Also popped there at the end of July. You almost got there into pre-market. Now, the thing that's interesting is it's like bid here at 785 or bid or offered, but it's holding up just below that level. So you get above 8. Who knows? Maybe get a little bit of short covering. But
Okay, I'm being
8's a big level.
I'm being corrected in the chat by who other than Chris Catchy, who knows everything. So they're selling the factory, but they're I'm sorry, they're going to use it. They're selling their plant, but they're still going to use the factory. I guess I read the
that makes sense.
Yeah.
All right, so I stand corrected on that. I guess that's why they would like that, because they're still going to have the ability to make cars and get some cash. So okay, I guess that makes more sense than what I was saying. So thank you everyone in the chat for correcting me. I don't mind being corrected. If
the lease back, it didn't make sense that they would,
It didn't make sense that the market would view that as a
All right.
positive.
Fair enough.
The market's trading positive. Although take this with a grain of salt, it's trading up 6.66%. We know those 666 numbers are kind of scary.
All right, it's 8:49. Let's do some ticker time and drop your tickers in the chat. We'll cover a few of them in the next 10 minutes. Was there anything else on my list first? Fubo had a headline. Don't know if you all saw that. Sportsbook announcement or integration with
Fubo?
With PaySafe.
Holy man, this has been like gross stock implosion, all the high multiple stuff. It's really, even yesterday, you can say, oh, S&P, nice day yesterday, held up. Not for the growth stocks. See, Kathy, KRKK, new lows straight down. So there is so many higher multiple stocks that are just getting the beats in this environment, and deservedly so, because a lot of these stocks had no rates to be where they were. What stock did you start on before I went to that
Fubo.
Oh yeah, Fubo.
You even got me confused.
I still like the Fubo.
Yeah,
story.
you
but
like
man,
it.
I don't like the chart at all. And when their stocks are making new lows, you got to go. And this is breaking down to new lows, so I'm not going to be the hero and say that this is the bottom.
It closed right near the low of the session yesterday, getting a little pop. Seems there's just a little bit of good news here. Let's look at the range from yesterday, 2277. If you feel like you want to lean on that, I'd be more comfortable if it maybe put another low in today at like 23. Where's it trading at? 23.22. Make a little low above that, close green on the session, and then maybe rally. But that's the only number you have. I don't even think, what's this December low? December low, it's below that, 23.61. So if you want to buy it on strength, let it maybe get above 23.61. Try and pick a bottom here, 22.77 yesterday.
Hey, Lord Jam drops a ticker that I haven't looked at this chart for a while. Rocket RKT. This is one that
I was thinking about that.
I want to like it, but
I want to like it.
I just can't.
I want to like it as well. I've wanted to like this stock for a very long time. I've owned it a couple of times, and it keeps making new lows, and it doesn't rally on good news. I'll say there's huge support at 16. So this stock has had huge support. I'll give you that 16.23 low. We're just going to round it and call it 16. There is nice support there, but man, the trend is ugly. And I've said for a while, I think that they should put in a dividend or something. I do own a piece of the UWMC because it has the dividend, but that hasn't helped at all either. That stock's been an absolute dog. So
I should just
tough-
buy it
tough
and never look
industry.
at it ever again. But
Should you? Well, I don't know. When they just
don't
keep
know.
going down, that's been a bad call to just buy and never look at it again. I mean, Rocket's near all-time lows, is it not?
What do you mean?
Yeah.
It works for Joel.
Yeah.
On certain stocks. So Rocket, this is right near the all-time low in RKT. It's 16.
Yeah.
Yeah, and they had the dividend too. I don't know. We talked about this when when the environment was really good, right? And it
wasn't
struggled.
going up.
Yeah.
It had the few times when it became a Reddit stock that it
One
went
time
again.
it had that Reddit stock.
Those
yeah.
Reddit stocks, man, when they get these kind of pops, you gotta ring the register. One thing I've learned from social media is that when your stock rips up 100, 200%, and you're just, and you're just lucky enough to own that stock that day, maybe you anticipated it or something, and that's good too. But I mean, when they give these 20, 30% pops in a day because it's the top stock on Reddit, that is a selling opportunity. Just like Corsair Gaming. I bought that at 40. I was a dog. It went down to 32. I was like, it's just not working out. Then all of a sudden, one day, it's a top mentioned stock on Reddit and opens at 42. I was like, thank you very much. I got my money back. It's 30% pop overnight on no news. It used to be like a stock would pop 30%. It was getting taken over. Now it was popping 30% because it's the high mentioned stock on Reddit. Selling opportunities. Thank you, Reddit traders.
Okay, a couple people mentioning Teladoc in the chat. It's at a 52-week low. 52-week low is where it's at.
Is it Zoom, Teladoc, all these Kathy stocks? Man, these are dogs. Man, these were the pandemic darlings. And you know what? Obviously Delta, is an issue, but it doesn't seem like it's as bad as we were in the first. But this wave doesn't seem to be getting as bad. We don't seem to have the reopening going completely away. This was $300 stock. It's now $125. Is there a certain point in time that Teladoc makes sense? Yes, but I don't want to be the hero. And stocks are going straight down. Why be the hero? It's breaking down, making new lows. The trend is awful. It's tough to make money on buying stocks in downtrends.
We've come down over 2-for-1 stock split. What's you're below 135.32. Next monthly lows down at 102.01. I don't know what to say. I mean, you're $10 off yesterday, or where are you?
I'm
You're
just glad I
$4
don't own
off.
any of these things.
Yeah, I can't.
I'm looking for tickers in the chat that we don't talk about too frequently.
DocuSign, though, that's a product that everyone is going to continue to use because it's just superior. I mean, like I said, I bought a house, I've sold a house using DocuSign. It's so smooth. I mean, I love that product. Valuation's crazy. Is eventually DocuSign have its Zoom moment? It isn't going to be as bad as Zoom. It isn't going to be as bad as Teladoc, I don't think. Could eventually DocuSign have a date with 200 again? It's possible, but great product. I mean, Zoom's a great product too, but I don't see like DocuSign. Everyone uses DocuSign. Like we said, Zoom. Well, people are using different, webcasts. We're using StreamYard. We're using different stuff. There's competition that has come for Zoom. Where DocuSign, I don't know if there's going to be competition coming for them in that industry. Like that's just the way people are doing business now. So fantastic that they've, become the player in their business. I don't like the valuations. Why I couldn't buy it though.
I don't know why they don't have any big competitors. I mean, it's not.
Well, why are you going to go away from Docu? Is somebody going to make that better? I mean, it's already as. How do you make that better?
So easy.
I don't know.
It's so easy. How do you make that better? So okay, I'm sure there is some competition, but now DocuSign is just it's like Google and search. You got to come up with the better search engine. See how Bing did? I mean, it's tough. Let's Bing it. It's easier to say. Let's Google it. Let's Bing it.
I mean,
Bing it was way easier to say. That's why they called it Bing.
You know what?
Bing it. But you know what?
Still around all these years later. It's still around all these years later. That's a victory in itself, I think. No?
They said the number one on CNBC, taking it from CNBC. They take our content, so we can take theirs too. They said yesterday on CNBC that the number one searched thing on Bing is Google. I got to Bing and I got to go to Google on Bing. I
You
don't know if
the
that's
wrong-
true, but that's hilarious.
Got the wrong
Wait,
browser.
wait. I knew a guy in college that if you wanted to Google something, like he had the Google Chrome browser, he would go to his URL tab, whatever. He would go to google.com. He would go to the Google homepage, and then he would go to the search it from the Google homepage. I was like, dude, just type it in. Just type it in. Just go. And anyway, it was a whole thing. Okay, let's do some more tickers here. A couple minutes left. Upstart, UPST. We haven't
Just
talked
a
this one for
monster.
a hot minute. Yeah. This is fintech,
Yeah,
right?
monster stock. Eventually, it has a cool-off period. Kramer is pumping, but he's been pumping that for a while. So give him some props. He's been right on that for a long time. It tried to go down the other day, and Kramer was just all over it. He ran a segment on Mad Money, 4 growth stocks that he'd be buying the dip on, and this was one of them. And it popped $10 on that segment, and it hasn't really looked back. The other stocks he ran on that segment were Affirm, Upstart. I think it was Asana.
How is a firm doing? 114. Oh, okay.
Are you in it?
No.
Oh, you got stopped out. That's right.
Should I be?
Suck.
Should I be in it?
I don't know.
I don't know either.
I don't know what we should be in at this point in time. It's a tricky market. To call it, it's a fantastic day trading market. I've had one of my best weeks, in a long time last week because of all the volatility from day trading. But from like a swing trading perspective, there's a lot of chopping. From a long-term investing perspective, it's been tough. So it's a great day trading environment, an overnight trading environment, but that's about it. So I don't know. From a swing trading perspective, I tried DKNG, stopped out. I mean, I've tried a few swings, I've stopped out. I don't know if I have any swings on right now. I think I got stopped out on all of them. That's what stops are for. So that when the swing doesn't work out, you don't start losing serious money.
Focus number. I mean, it's a pretty volatile stock in the UPST, but I see the all-time closing high at 324, and then it would right that next day that had a close at 323.59. Now I know that that's a ways away from the previous day's high, but it's still closed at wrong 331.99. New number 331.99 all-time closing high. Yesterday saw a high 32.10. So big number, $12 off it. Unless you get above that, I see more downside in UPST.
It's 8:59, guys. Final thoughts before we go.
Final thoughts before we go.
Yeah, buckle.
It's hard to say an inside day from yesterday's intraday
Did
range.
you get the inside day yesterday? You did.
You did.
Joel called it. You did
Joel
get
called it.
Great call, Joel.
And Joel called the 15-minute bar in Bed Bath. So
My all-time worst call. That is the first in the last 15-minute bar I've ever called. I was going to call myself out on it. BBBY. Fill in the monthly gap now. I guess I might as well double down and say, well, you filled this monthly gap here at 16. So there you go. There you go. No more 15-minute charts for me.
Joel, do you have
No
any?
more calls.
Joel, you have a dad joke for the day?
A dad joke. Oh, there've been a couple good ones, but
Just give us one. Just give us one.
Just one.
Yeah.
Two of them. Dads love saying, "I don't care who started it, I'm ending it."
Okay.
And then dads love adding Meister to the end of everyone's as a nickname.
All right, I don't know.
Dispenser Meister.
All right.
All right, folks.
The
I'm going to go to PFP
Stiffmeister.
Plus. We missed a lot of tickers here. I'm going to cover those on this end of Q3. Marc is bullish. I'm kind of bearish. We'll see what happens.
I don't know how bullish the market is, but again, the one thing to consider is that the trend has been to sell the overnight rallies, which we have already seen here this morning. The one issue I have with coming in and selling us up 13 is that we're already significantly off the highs.
Yeah.
The second thing is it is the end of the quarter, and historically speaking, I started the show saying this, I'm going to say it again just to remind you, historically speaking, this day closes strong. We will see if the recent weakness trumps that. But from a quantitative perspective, you don't usually want to be selling early in this day because it often closes strong.
All right. Thanks a lot, Dennis. Have a good one. Everyone, smash that like button. Subscribe if you haven't already. I'm going to end the stream. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. The day 2 of the Benzinga Small Cap Healthcare Conference starting right now. I'm going to end this and it'll redirect to that. Everyone have a good rest of your day. Good luck and stay green.